Security Analysis and Portfolio Management, Unit 1, Part 3, Investment Planning. In previous part, that is part 2, we learned about investment, speculation, gambling and different investment avenues. In this part, we will learn investment planning. What do you mean by investment planning? Investment planning. It is the process of matching your financial goals and objectives with your financial resources. Investment planning is a core component of financial planning. It is impossible to have one without the other. So investment planning, it is a process of matching your financial goals and objectives with financial resources. Means what amount of money you have, how you utilize it to earn profit. Steps in investment planning process. First one, setting investment goals. In first step, we set investment goals, means objective, why we are investing our money. So it can be for liquidity purpose, for earning purpose, anything can be a reason for investment. So first we have to decide the investment goal. Then the second step, understanding the risk and return. Here, as you know, there are two attributes while making investment, risk and return. So we have to understand the risk and return of the securities where we are going to invest our money. There should be minimum risk and maximum returns. Third one, designing an investment portfolio. Portfolio, as you know, to make investment in different securities. So designing an investment portfolio means we have to decide in which all securities we are going to invest, like for equity shares, preference shares, or in debentures, mutual funds, or real estate. So we have to decide and make a perfect portfolio. Then fourth one, evaluating the market and investment avenue. Here we have to evaluate the market and make investment avenues, means we have to decide in which investment avenue we will invest our money. These all are the steps in investment planning process. Objective of investment planning. Objective, first one, to identify the financial goals to derive maximum return. Means we have to set a financial goal through which we can earn maximum return after investing. Second objective is to choose the right investment option. There are many options to invest, like equity shares, preference shares, debentures. In between all these, the right option should be chosen. So the objective of investment planning is to choose the correct one. Third is to decide upon optimal investment strategies. We take different investment strategies through which we will make investment with minimum risk and maximum return. Fourth one is to maintain balance between risk and return. There should be a balance between risk and return. There should be minimum risk with maximum return. These all are the objectives of investment planning. Now we will study about stock market. It is an organized market for the purchase and sale of securities of joint stock companies, government and semi-government bodies. It is center where shares, debentures and government securities are bought and sold. In short, stock exchange is a place or market where the listed securities are bought and sold. So stock exchange, it is an organized market. It is governed by SEBI, Securities Exchange Board of India. Here there is purchase and sale of securities takes place. Next, stock market. A place where shares of public listed companies are traded. Second one, the primary market is where companies float shares to the general public in an initial public offering to raise capital. When the company wants some capital, they they issue their initial public offer and make money. Third one, it facilitates stockbrokers to trade company stocks and other securities. A stock may be bought or sold only if it is listed on an exchange. Fourth one, the meeting place of the stock buyers and sellers. India's premier stock exchange are BSE and NSE. BSE means Bombay Stock Exchange and NSE means National Stock Exchange. Next, functions of stock exchange. What the stock exchange does. Functions of stock exchange. First one, providing liquidity and marketability of securities. Stock exchange provides a ready and continuous market for buying and selling securities. It provides a platform where shares can be sold and bought by buyers and sellers. Then second one is pricing of securities. Based on the forces of demand and supply, stock exchange helps in putting a value on the securities, which provide instant data to both buyers and sellers and thus helps in the pricing of securities. Third one is safety of transaction. All participants associated with the stock exchange are well regulated and are required to work within the legal framework given by the regulator. Such a system ensures the safety of transaction. In India, all trading is regulated by SEBI. Next is fourth one, contributes to economic growth. People get a chance to buy and sell their shares, letting them invest money. Stock exchange provides a platform by which savings get channelized into the most productive investment proposals, which leads to capital formation and economic growth. Fifth one is spreading of equity culture. Stock exchanges have extensive information on the listed companies, which is further available to the public. This data helps in educating public about investments in securities, which leads to spreading of wider ownership of shares. So these all are the functions of stock exchange. Next, Indian Stock Exchange. Most of the trading in Indian stock markets take place on its two stock exchanges, that is BSE and NSE. First one, BSE, Bombay Stock Exchange, and National Stock Exchange means NSE. These two we will study in next slides. Bombay Stock Exchange. It was established in 1875. BSE, formerly known as Bombay Stock Exchange Limited, is Asia's first and the fastest stock exchange in world, with the speed of 6 microseconds and one of the India's leading exchange groups. Today, BSE provides an efficient and transparent market for trading in equity, currencies, debt instruments, derivatives, mutual funds, etc. It has a global reach with customers around the world and a nationwide presence. BSE systems and processes are designed to safeguard market integrity, derives the growth of the Indian capital market, and stimulates innovation and competition across all market segments. Next, National Stock Exchange. National Stock Exchange is the leading stock exchange in India and the fourth largest in the world by equity trading volume in 2015, according to World Federation of Exchanges. NSE has a fully integrated business model comprising our exchange listing, trading services, clearing and settlement services, indices, market data feeds, technology, solutions, and financial education offerings. NSE is a pioneer in technology and ensures the reliability and performance of its systems through a culture of innovation and investment in technology.